Hi everyone. Various studies have shown that there is a prevalence of poor accounting amongst companies that operate in Cameroon and in some sub-Saharan African countries. And this is the reason why many companies in these countries don't actually live for more than or exist for more than 5 years. This is the reason why today we are looking at the power of accounting in this presentation in order to give entrepreneurs, business owners, and managers some insight into the relevance of accounting in growing their businesses so that they can start taking appropriate measures in implementing good accounting and financial management systems in order for their businesses to grow.
My name is Collins Mazu. I'm an accountant registered with ACCA. ACCA is the Association of Chartered Certified Accountants, an accountancy body based in the UK. And I've been a member of this body since 2008. I have worked in 3 countries in Africa over the past 17 years. And during this time, I've been touched by the fact that Africa is a very rich continent in terms of resources, and at the same time Africans live in poverty. And I've come to realize that the reason for this paradox is the fact that resources in African countries are not properly managed. There is widespread poor resource management, and at the center of this poor resource management is poor accounting culture. Poor accounting and financial management could be traced as one of the reasons why our resources in Africa are poorly managed, and hence there's poverty. So I'm very passionate about capacity or competency building of Africans around accounting and financial management.
As I mentioned earlier, this presentation has been prepared by Africa Finance Services, which is a consulting business that is registered in Cameroon, which provides training around accounting and financial management to entrepreneurs and generally to Africans, because we believe that this will go a long way to eradicate the poor resource management challenge that many countries in sub-Saharan Africa experience. We do believe that strong accounting and financial management is at the heart of every successful venture, be it at the personal, organizational, or national level. So in today's presentation, we are going to look at 7 key points quickly. We are going to look at some accounting misconceptions as the first point, and then the second point is going to look at the definition and history of accounting. Thirdly, we're going to look at the problem of accounting in our ecosystem. And the fourth point is going to look at accounting culture in Cameroon. And then we're going to look at a guide on setting up a simple accounting system. And then the importance of accounting in your business will be looked at. And finally, we're going to look at how accounting relates with financial management. Some misconceptions about accounting. I like that at the end of this presentation, we can come back to these questions or these key misconceptions and see if we can have a different or an informed response to them. So the first one is that must you be excellent in arithmetic to become an accountant or do accounting in your business? Must you be a math genius, a mathematics genius to be able to do accounting in your business? Is accounting just for tax purposes? Do you do accounting just because of taxation? Is accounting just an added expenditure to your business? Is accounting some sort of useless activity that you do for your business? Is it just a cost? So what is accounting? From a very simple definition of accounting from a dictionary, accounting is going to be defined as a skill or activity of keeping records of the money or resources a person or organization earns and spends. So basically recording what comes in terms of resources or income, and what goes out in terms of expenditure or expenses, as is commonly referred to. On the right hand of your screen, you would see 4 yellow blocks. These 4 yellow blocks actually explain
or define accounting fully. Accounting has to do with identifying activities or transactions. In this case, I'm sure most of you have heard about transactions. Identifying transactions that will then be recorded. Once these transactions are recorded, they will then be summarized and analyzed so that they can be reported or communicated to users. So that's basically what accounting is about. Accounting has to do with identifying transactions that occur in your business and recording these transactions in a particular format that will help you to make an analysis of the transactions that have been recorded. And once this analysis has been made, these transactions will be reported now or communicated in financial statements or through financial statements or through reports, various types of reports, to various users of these reports. And as you can imagine, there are two types of users. There are those that are external to the organization, like the taxation department is always the very first external user. You've got banks, you've got suppliers, and your clients that are all other external users. From an internal perspective, you've got management, you've got employees, and you've got maybe the directors of the company. So what you see, accounting is designed to report on the activities of your business to users of this information. For this slide, I'm just going to say that accounting is a language of business. There is absolutely no way that your business is going to survive if you, as the entrepreneur or the business owner, does not understand this language, does not understand basics of accounting. I think that's a very, very, very clear message that we can pass from this slide. It is worth noting that accounting is broken down into four sub areas, and the first one is financial accounting. Financial accounting simply has to do with the rules and regulations that apply when you're preparing accounts or preparing reports to be used mostly by external users, and there are some guidelines and there's some regulations around this. If you've ever heard about OHADA accounting, this is where it fits. OHADA accounting provides guidance in order for financial statements to be prepared. That area of accounting is referred to as financial accounting. Management accounting, on the other hand, has to do with specific support that accountants perform for the management. And in this case, there are no specific regulations, there are no external regulations that guide. This is when management needs support in terms of planning, in terms of controlling and evaluating operations and activities within the company, and that accountants can provide. And management accountants basically prepare reports that are mostly intended for internal consumption, hence the name management accounting. And then taxation, that's the big one that all of us know about. We've all been affected by taxation as business owners in one way or the other, and taxes are actually calculated on the basis of the accounts that are prepared in the financial accounts. So it's very, very important that we understand that accounting, is the base. Accounting records forms the base for taxes to be paid. Then, of course, auditing. Auditing now is an arm of control. So basically, the financial accounting guys are going to prepare the financial statements of the company that they want to, provide to users. But before they are provided to users, the auditors, the auditing guys will come in to control, to check, to see if what has been prepared by the financial accounting arm, has been prepared correctly. And most of the times, auditors are external to the company preparing the financial statements. Auditors are governed by what we call ONECA in Cameroon, the accountancy body, and then ONECA gives the license for people to act as auditors, and they have to be independent from those that are preparing their financial statements. So that's how accounting generally, the overview of accounting looks like. Now let's go to the brief history of accounting. All right, accounting is as old as ancient Mesopotamia. So going back to about 7,000 years ago. In those days, those who know history more than myself would know that in those days it is alleged that there were hunters and farmers, and now we are realizing that they were also accountants. So there were hunters, farmers, and accountants. And accounting was practiced even before the invention of money. That's quite interesting. In the days of trade and barter, accounting was being practiced. Accounting has always been present wherever there was the government. So you can see how important accounting has been over time. Modern accounting started in the Renaissance in the 14th to the 17th century, when the concepts of double entry and all of that came into place. And accountants have been very instrumental after the Industrial Revolution. Accountants became essential to ensure investors' interests were protected. So just to give you the importance, to show that accounting is something that just happened overnight. It is something that has accompanied socio-economic development over time. So, there's no way we're running from it. We can run from it now. The problem for accounting is actually the absence of an accounting system in companies. Now, running your company without an accounting system is almost trying to run a car on flat tires. You agree with me that if you run a car on flat tires, that car is not going to go far. And I guess this is the reason why we have an economy that is very informal and made up of small and medium-sized businesses that don't last long. We're going to see some statistics on SMEs in the Cameroon economy. As I mentioned in the last slide, the status of SMEs in Cameroon. These statistics was obtained from the Ministry of Small and Medium-Sized Enterprises in 2020. And the key pointers that we can share today is the fact that 99% of companies in Cameroon are small and medium-sized enterprises who have an average lifespan of 4.5 years. 4.5 years. And it was also mentioned that 81% of SMEs are less than 10 years old. One of the main difficulties facing small and medium-sized enterprises in Cameroon is the fact that there is a presence of poor accounting and financial management. So, like I said earlier, running your business without accounting is like running a car on flat tires. And this means that that car is not going to go far. The business is not going to go far. There is no doubt to the fact that doing or running a business without accounting is not sustainable for the long term. So what must a business do? Because we talk about business, talk about accounting, sustainability. So just to put into perspective before we carry on, I want to explain the concept of resources and then transactions. Now, a business is like a vehicle. A business uses resources. These resources could be finance, could be many things. It uses resources, could be human resources, could be property, could be expertise. So resources is in red, as you can see in the left side of the slide with the screen. A business can actually buy these resources and resell them. So those who are doing buy and sell, they will go and buy from one place and they will resell. Or they will buy raw material, produce a good, and then sell. Now, they do this by carrying various activities. These activities generate transactions that have a financial implication, like we've explained earlier. In so doing, businesses interact with various stakeholders, suppliers, clients, tax department, community, etc., etc. The objective of all of this is for the business to meet its objectives. And no matter how you coin those objectives, the main thing here is that if a business consumes resources, the business wants to make sure that they derive more resources than they consumed. So in essence, if you invest 5 million francs CFA in the business, at the end of the year or end of a period of time, you would be expecting to get 5 million plus from that business. That becomes a profitable or a sustainable business. You want to invest resources and get out more resources. Now, if the business activities, transactions are not tracked, measured, and recorded, it will be very difficult to meet the business's objectives. I think that's something that we need to be very clear about as we carry on. Let's move on to the issue of poor accounting. How poor accounting affects the businesses. Taking very popular problems that relate to us directly, we believe will relate to you as a business owner. We normally have a lot of tax problems. There are always disputes, or when as business owners we see the tax officials, we always kind of panic, or We don't like them. And I think it's just because of the fact that we don't keep good accounts, and as a result, we end up paying heavy taxes and penalties. I've mentioned earlier that the taxes that we pay are based on the accounts. The other part is about business growth, the challenges that businesses have in the country due to poor accounting. The first one is the fact that if you don't keep accounts, banks cannot assess or evaluate your business. They will be in a difficult position to provide loans to you. I'm sure some of us have experienced this. Investors will not be able to invest in your business if they cannot see clearly, or if they cannot see your business as a transparent business. Nobody wants to put their money in another person's business and the person uses the money the way they want, or put your money in a business that you don't trust. And for a business to get to be trusted, it must at least be able to show some transparency. And this transparency can only be shown through clean accounts. If a business does not keep accounts from day one, not when they grow big, from day one, they would face all sorts of operational challenges, from stock losses, due to theft, right? Employee turnover is going to be high, loss of sales, etc., etc. We're going to show a small illustration as we carry on. When the owners of a business that does not keep accounts are not present, that business generally collapses. We know many businesses in the country that have collapsed after their owners passed away, or when their owners were not there for a long period of time. We're not going to name names here, but I'm sure we know about such businesses in our economy. So all of this accumulates into the accounting culture in Cameroon, and I said earlier, this is probably similar for many countries in sub-Saharan Africa. Poor accounting culture gives rise to poor financial management, and this, facilitates poor resource management, which now results into collapse of businesses, especially small and medium-sized businesses, slow socioeconomic growth, or no growth at all, which is evident because we experience many people living in poverty, and the financial sector of the country is at a risk of collapsing. I don't know if some of you have accounts with microfinance institutions or with banks, or even in some jangis. If you watch keenly, there are always some challenges in these jangis. There are always some issues. People taking loans and not wanting to pay back, or not being able to pay back because they did not manage their money well. And this now puts a further threat on the economy as it is. So accounting is very crucial for socioeconomic development of our country. We now turn our attention to providing some guide. We've talked about the negatives, we've talked about the dangers of not keeping an accounting system. So how do we go about keeping an accounting system? I think it's been natural that after looking at the poor accounting condition in the country, we now need to at least come up with some proposal as to how we should keep accounts or set up an accounting system for your company. The first thing is that, like I said earlier, and we looked at it in the misconceptions, you should not set up an accounting system only when your company is big. You must set it up when the company is at its inception, at the start of your company. Even before you start doing transactions, you must set up a small system that you're going to be using to record transactions. So an accounting system is a set of accounting processes with integrated procedures and controls. So it moves from 1, 2, 3, 4. It depends on how many processes you have within your accounting system. But now the main thing is that you should be in a position to record something, or your transactions. These transactions, when you record them, you must record them in a way that you are able to analyze and summarize them, so that you can now then provide various reports. Alright, so you don't just record transactions. For instance, if you're going to buy from Douala and come and sell in Limbe, then your accounting system must be in a way to record you're traveling to Douala, you're traveling back to Limbe, your movement within Douala to buy the stuff, the cost of buying. You must record the date. Those are key information that is needed as you record the transactions. so that you'll be able to make this analysis after you've done the recording, and then to be able to report appropriately. So we're going to illustrate this, and then you can have a better appreciation. I mentioned recording business transactions, as it's one of the first parts. As I said earlier, you must be able to identify transactions that make up your business. So it could be sales, purchases, transport, and all of that. And that I've already shown. Example of a shop owner. Alright. And then you record relevant information in the books of prime entry. Again, like I said, and no one wants to go into those details, but the key things you must record is, like I said, the items, descriptions, the quantities, and the date, and the prices, so that you can be able to analyze them. So the next slide will show this to us. So as an illustration, take a provision shop, a shop that sells a couple of items, household items like soap, biscuits, and tissue, and all of that, sugar. So there's a list there, you can have a look later on. But you should note that on the left hand side, you see, there's a date, as you can see there. There is description of the item, and there's a receipt number, which is basically maybe the invoice number, and then you have to record quantities in your sales day book. You're recording a unit price. Then there's cash sales. Some businesses actually sell on cash, others sell on credit, or sometimes you sell to some clients who come and buy on credit because they have a relationship with you, others who have to buy on cash. And then of course total sales. Now you realize that in order for you to record sales that will permit you to be able to do proper analysis later, the key things you must include will be the date, description of the item you're selling, the quantity, and the price at which you're selling them. It's very crucial. And then let's see how we can analyze this data that we have recorded. Now, for the week that has passed, for instance, we want to do some sort of a report on the items that have been sold in terms of quantity. So again, like I said, in terms of quantity, because this will help you to make certain decisions going forward. Now, you realize that the item that sold the highest number of units during the week was flour, 30, followed by gari, and then of course followed by tissue paper. It means that if the shop owner wants to go and purchase stock from the suppliers in future weeks, the shop owner must always be careful, or must always ensure that there is enough flour, gari, and tissue, because those are the top selling items in the shop. The shop owner is not going to be stressing too much about buying things like Savon, Lipton, and biscuits, because those are low selling items. And this is how accounting information helps a business owner to grow their business. You see that at this stage, we're not talking about taxation. The accounts that you keep, or the recording of transactions today, helps you to shape your business tomorrow. And this is the magic of accounting that I believe many entrepreneurs in African countries are missing. Now, we want to look at total sales in terms of value. Now, value means in terms of either US dollars or France CFA. So you realize that flour had sales in terms of quantity. The highest selling item in quantity terms was flour. But here we are looking at sales value. And in the sales value, you see that gari has the highest sales value. So quantity wise, gari was 29, flour was 30, but value wise, gari has brought in more money, 87,000, than flour, 60,000. That tells you that the price of gari is higher than the price of flour. It could also mean that maybe gari is also providing a higher margin than flour. So sometimes you want to sell as much as possible, true, but you also want to see those items that bring in more revenue. And if they're bringing in more revenue, are they bringing in more profits to the business or not? So these are things that, like I said, will give you more insight into your business activities and will help you to make informed decisions as you carry on your business. So again, just as an illustration from the sales perspective, many people don't even track their sales in this detail so that they can have information going forward that will help them to make better decisions and to grow their businesses. Remember, a business that does not sell is going to close down. All right, sales is a top line. So, after looking at the problems and looking at the simple guide on certain accounting system, let us summarize why accounting is important in your business. Accounting permits business owners and managers to be able to make informed decisions. I promise you, making a decision is not easy. If you make a decision just based on a guess, based on sucking your thumb, that decision could be a disastrous decision for your business. You must make a decision that is based on analysis of something that is, evidenced by records in your business. If you keep accounts and produce clean reports, you'll be able to attract investors in your business, and your business is going to grow. If you keep accounts there, banks can analyze your business easily and they can grant you loans. Don't forget that the money that is at banks does not belong to the banks. Some other people like you have put their money in the bank, and the bank needs to be responsible in managing that money. The banks must be able to give it to people who are able to use it well and come and repay with interest. And one way of demonstrating that you are able to manage money well is for you to have good accounts. Accountability equals to responsibility. Once you keep good accounts, you would be able to comply with the various laws and obligations in the country. You would have less tax problems. That I can promise you from even personal experience. Once you keep good accounts, you can easily measure your performance, and that will create a smooth path to sustainable growth of your business. So those 5 points are the key important reasons why you need to have an accounting system in your business to produce clean and fair accounts or financial reports. Now let us quickly look at how accounting interacts with financial management. Financial management is a process by which resources are efficiently and effectively managed. Financial management only kicks in when there's an accounting system. As you can see on the left-hand side, there are various types of resources that are at our disposal, which we don't manage well. On the extreme right-hand side, you see the objectives that we are trying to attain, either as an individual or a company or a nation. And in the middle, you've got now the financial management process that involves 4 things: planning, organizing, directing, and control. Please try to read up more. You see that this planning, organizing, directing, controlling would only be done properly when there is an accounting base, when there is a database that they can use. How do you plan for tomorrow when you don't know what happened last week? How do you plan for next year when you don't know what happened last year? It becomes a bit difficult. You need to be able to organize your things and activities based on some information from your business. So accounting is like the foundation. It's the language of business. You cannot run a business without accounting. So in summary, strong accounting and financial management is at the heart of every successful venture, be it at the personal, organizational, or national level. So again, it is very important to understand that without good accounting and financial management, your business is not really going to grow. So please make the effort to educate yourself. We as a company now have produced a very customized package for entrepreneurs or business owners, especially those who have not done any formal education in accounting or in financial management. And I've said earlier, you do appreciate by now that you need this. It's not something that we are boring you with. You need this. So this training is accounting and financial management for business owners in Cameroon. It is broken down into 3 modules. It's a 20-hour training, and the first module is looking at accounting basics, right? And which will end in trying to give you more details on how to set up an accounting system for your business, no matter how small your business is. And the second module now will look at the key financial management principles that you need to know to be able to, efficiently and effectively manage the resources that your company has at its disposal. And then module 3 is going to look at the big headache that most of us have: business taxation. You need to get ahead of it by understanding how taxes are supposed to be calculated and paid. And we're going to offer this training either through online or face-to-face. It is going for a promotional fee of just 50,000. And if you are interested, then you can contact us, send us an email, call us, and we can now discuss how we can, schedule this training for you and for your managers of your businesses. So thank you very much, and we hope that this has been a useful presentation as you strive to build your business. So you can contact us through our website or through sending us an email through our email address. Our number is there for you, and then of course we are based in Limbe, but with technology today we can always serve you from far through the various virtual platforms that we can use. We can use Zoom, we can use WhatsApp, we can use Google Meet and all of that. All right, and we also have various social media handles: Twitter, Instagram, Facebook, and the name is Africa Finance Services. So once more, thank you very much, and best of luck as you strive to build your business.